Hello, good morning. My name is Victor Aluyi, and I'm the Head of Investment Advisory at Sankore Global Investments. And this is your weekly financial market roundoff. We start off in the US, where stocks closed Friday a touch weaker, with the Dow falling for a seventh session and posting its longest run of losses since 2020 as it slipped about 20 basis points. The Nasdaq added 12 basis points, while the S&P was, little change. So stocks were essentially, mixed on Friday. However, for the week, the Dow posted a 1.8% decline. The S&P slipped by about 60 basis points, ending a 3-week winning streak, while the Nasdaq was up by about 0.3%. I mean, the market seems to be sort of recalibrating, if you will, in the aftermath of the post-election rally, which seems to be kind of fizzling out, and also that broad rally that we had seen in the aftermath of the election is also looking to sort of narrow quite significantly, with just a few tech names still, steaming along. Last week, we saw CPI prints, which essentially came in line with expectation at 2.7% year on year, with a 0.3% month-on-month move as well. With this number coming into this week, the Fed is essentially going to be having its last meeting of the year. And the market really is pricing in a 95.3% chance of a 25 basis points cut. Also, this week, we'll be seeing economic data, particularly PMI, later today. So clearly, what that PMI number turns out to be, and obviously, the expectation that the Fed will cut, as that materializes, we believe that would provide, if you will, some sort of positive momentum for the market, and because we think that the market still has, quite some positive move to make, this year. So as the Fed, normalizes interest rates, or actually goes ahead to implement this 25 basis points cut that the market, widely expects, we think that it will provide some, at least near-term, support, for the market, really. Over in Europe, also again, as widely expected, the ECB announced its fourth rate cut for the year, as it lowered its inflation forecast for 2024 and 2025. Inflation forecast came for 2024 is now 2.4% from the previous forecast of 2.5%, while that for 2025 was also reduced to 2.1% from 2.2%. The ECB believes that the disinflation process is well on track. It also reduced its growth forecast, revising 2024 growth forecast to 0.7% from a previous target of 0.8%, while the growth forecast for 2025 was revised lower to 1.1% from a previous forecast of 1.3%. The ECB believes that the risk to growth really remains tilted to the downside. Also in Europe, the Swiss National Bank cut interest rates by 50 basis points. This was much larger than the market, had expected. The market really was looking for at least about a 25 basis points cut. But again, you recall that, Switzerland was the first major economy to, commence the loosening of monetary policy in March. So this might not be so far-fetched. Also in France, the French president, Emmanuel Macron, has named Francois Bayrou as the new prime minister after the ouster of Michel Barnier in the fallout of the budget impasse that led to a no vote confidence that saw the prime minister impeached. Also important to point out here that Bayrou marks the fourth. Bayrou marks the fourth prime minister that we have seen this year, and this is just reflective of the sort of political turmoil that we have seen, in France this year. So that is one we certainly will continue to keep an eye on. In Asia, we've got some data that came through, particularly for China. Trade data missed expectations for November. And this just basically fueled concerns about the health of the Chinese economy, as consumer demand really remains very sluggish. Exports rose 6.7% year on year, significantly lower than the 12.7% that we had seen in the previous month, and also lower than the 8.5% that had been expected. We also saw a decline in import data by 3.9%, marking its sharpest fall in about 15 months. We also saw retail sales miss expectations. It grew by about 3% in November, slower than the 4.6% that was expected, and of course, slower again than the 4.8% that we had seen in the previous month. All of this is just really reflective of the fact that efforts by the Chinese government at reflating the economy. We saw quite a slew of monetary policy measures that were aimed really at easy monetary policy and reflating the economy a couple of months ago. All of that really have fallen short of attaining the mark. Maybe again, a bit more time is required, for us to truly gauge the impact of, that monetary policy bazooka that we saw a couple of months ago. And in Korea, in what might be, the climax really of the, martial law imbroglio that we saw last week. The president has been impeached in a second attempt. There was a first attempt which wasn't successful, but the second attempt has been successful. Again, the political situation in Korea then comes into play with a bit of uncertainty. We've seen that, reflected in the movement of the won over the last couple of weeks. Nevertheless, we expect that the situation there becomes a lot more calmer now that the president is out of the way, and will pave way for, usher in basically a new lease of life, if you will. And locally here in Nigeria, last week was largely quiet in the fixed income market. Attention really was focused on the outcome of the PMA auction that held midweek. We also had, a really tight liquidity situation, which then ensured that a lot of participants just remained on the sidelines. Even in the aftermath of the PMA auction, which saw a reduction in the stop rate for the 1-year paper. The CBN also floated an auction last week where it sold about 1.5 trillion in the 351 and 365-day papers as well. Also today, there is going to be a bond auction where the DMO is selling about 120 billion in 2029 and 2031 bonds. Again, the market really will be looking to the outcome of this bond auction to get a sense of some near-term direction for the fixed income market. So, I mean, this week, all eyes really will be on the Fed and that decision, and the impact that it is likely to have on the market. That's pretty much our update on global financial markets. We hope that you have a very, very productive week. Thank you very much for your time.